Hey everyone, welcome back. Today we're going deep on something that I think is super relevant to just about everybody.
Yeah, for sure.
We're talking personal finance and investing,
Yes.
and we are going to be pulling from, as always, a really interesting source.
Mm-hmm.
It's called Pasted Text. And
Okay.
this deep dive, we're really going to focus in on this section
All right.
about personal finance and investing and try to give you, the listener,
Yeah.
a really solid foundation in some of these concepts.
I think that's really important because, personal finance can feel very overwhelming
Oh, yeah.
to a lot of people.
Yes,
Right.
definitely.
It can seem very intimidating, like you need to be a financial expert to even begin.
Right, right.
But the thing is, at its core, personal finance is just about making smart decisions about your money.
That's it.
Pretty much. Yeah.
Okay.
Like, think about it. Every day, you make choices about how you spend, save, and manage your money.
Right.
Those everyday decisions are all part of personal finance.
So it's not about becoming some kind of Wall Street guru.
Not at all. It's for everyone, regardless of income or background.
That makes me feel a little better.
Good. Because it should.
So how does investing fit into all of this? I'll be honest, when I think about investing, I get a little nervous.
I understand. A lot of people associate investing with risk and complexity.
Yeah, it seems like gambling sometimes.
Well, it's not about gambling at all.
Really?
It's more about putting your money to work for you, giving it the potential to grow over time.
Mm-hmm.
Think of it like planting a seed. You nurture it, you give it time and the right conditions,
Okay.
and eventually it grows into something much bigger.
So investing is more like gardening than gambling.
Exactly. You're cultivating growth, not just rolling the dice.
So in Pasted Text,
Hmm.
they talk about this thing called compounding.
Yeah.
And I've got to be honest, that one kind of goes over my head a little bit.
Compounding is where the magic really happens, I'll admit.
Okay.
It's like a snowball effect for your money, right? Imagine this, okay? You invest $100, and it earns 10% interest in a year.
All right.
So now you have $110, right?
Right.
The next year, you earn interest not only on that original $100, but also on that extra $10 you earned.
Oh, I see.
And that keeps happening year after year. Your money keeps growing on top of itself.
So it's not just earning interest once. It keeps earning interest on the interest it's already made.
Exactly. Over time, even small, consistent investments can grow exponentially thanks to compounding.
That's pretty amazing.
It really is.
I'm starting to see why people get so excited about this stuff.
And that's why starting early is so important.
Because the earlier you start, the longer your money has to compound and grow.
Precisely. Think of it like this. Someone who starts investing in their 20s, even with a small amount, could end up with significantly more wealth than someone who starts later, even if they invest more money overall.
It's all about giving that snowball more time to roll down the hill.
You got it. The earlier you start, the bigger that snowball can get.
That makes a lot of sense. But every time I think about investing, I also think about the risk. What if the market crashes? What if I lose all my money?
Right, and that's a very valid concern. No investment is completely risk-free, but that's where understanding your own risk tolerance comes in.
Okay.
It basically means figuring out how comfortable you are with the ups and downs of the market.
So everyone has a different risk tolerance.
Exactly. Someone nearing retirement, for example, might prefer lower risk investments like bonds, which offer more stability, but potentially lower returns.
Okay.
Whereas someone younger, with more time to recover from potential losses, might be more comfortable with stocks, which could offer higher growth, but also come with higher risk.
So there's no one-size-fits-all approach to investing.
Not at all. It really depends on your individual circumstances, goals, and frankly, your personality.
Personality, what do you mean?
Well, are you someone who stresses out over every market dip? Or do you see those dips as buying opportunities?
Oh, interesting.
Knowing yourself and how you react to risk is a big part of figuring out what investment strategy is right for you.
That makes a lot of sense. I'm starting to see how this is less about gambling and more about making smart choices.
Exactly. It's about being informed and intentional with your money.
So the big takeaway here is that personal finance is about understanding your own goals, your risk tolerance, and making decisions that align with those things,
You got it. And it's about taking control of your financial future.
not letting it control you.
Exactly.
This has been a really enlightening deep dive. I feel like I have a much better grasp on these concepts now.
I'm glad to hear that.
And for everyone listening out there, here's something to think about.
Mm-hmm.
Now that you have a basic understanding of personal finance and investing, What's one small step you can take today
Yeah,
to start moving towards your own financial goals?
good question.
It doesn't have to be anything huge.
Yeah.
It could be as simple as downloading a budgeting app, or maybe doing a little research into different investment options.
Or even just having a conversation with your family or partner about your financial goals.
That's a good one.
Yeah, the important thing is to take that first step and start taking control.
Awesome. Thanks for joining us on this deep dive. And remember,
Thanks for having me.
every journey starts with a single step.
Absolutely.
Thanks for listening.
See you next time.